Good morning, everyone, and welcome back. This is Daily Trading Analysis with a weekly recap after all week of really difficult price action. And let me tell you, expectations got crushed. And I was on holidays, I was following the market. Sorry for not uploading videos, but this video, this weekly recap, has everything you need to know that happened all this week regarding CPI, PPI, consumer sentiment, and technical analysis on the weekly, the daily, and lower time frames. Let's start directly with the economic data. On Tuesday, we got the economic optimism that came way lower than expected. If we see the trend since April at 47, we are now 7 points lower as the economic optimism goes lower and lower and lower, and recession fears starting to increase. US wholesale inventories fell 0.5 month over month in June as merchants liquidated stock due to lower and lower demand. So this is the expectations regarding economic and the way people see the future regarding inventories and economic activity. This one was not in a lot of eyes, but I think started the sentiment for the week. On Wednesday, we got the 30-year mortgage again above 7%. We went lower than 7% for 3 months, but now we are even higher than before. And that's why the mortgage applications continue going lower and lower. People are really suffering to find really good mortgage rates. On Thursday, the first big one, CPI, month increase 0.2 as expected. That's the core one. That's the one we are going to focus in a little bit on the detail, and the general one month over month also increasing. Year over year, we are slightly lower than expected, but the trend is typically good from the 6.6 in September last year to 4.7, but the sticky inflation, the core one, is the thing that we are going to focus. Inflation rate, general year over year, 3.2%, also trending lower, but look at this, from 3 to 3.2. A lot of analysts were expecting that June was the bottom at 3%. And market took a dip on this CPI day on Thursday. We went higher as expectations went higher, but the daily candle that we are going to review later was super important. A huge rejections and a lot of bulls got trapped. Why? Let me tell you. Shelter came 0.4%. Energy 3.0%. We all know that energy prices are rebounding. And this is one of the good things that a lot of people trading fuel and crude oil was super bullish. Remember that Saudi Arabia and OPEC Plus are cutting production in order to manipulate prices higher. And this, we all knew that this was going to affect CPI. And the pace at which the inflation was going down, it's now halted. We are now ticking higher. And not only crude oil and energy, we have also sticky inflation on services. Shelter and transportation services came way higher than expected. And I think that's the key to understand why we took that dip. We are going to review that later on Thursday. Initial jobless claims came higher than expected, continuing jobless claims a little bit lower, but labor market, it's not on focus anymore. Everyone is focusing on core services, shelter, home prices, and services. Friday, PPI came higher than expected month over month and year over year, and also for core PPI came higher than expected on both year over year and month over month. If we check the PPI, final demand services total 0.5%. And this is the thing that we have to focus. Transportation and warehousing, 0.5. Services, everything it's going around services inflation. And one last bit of information, Michigan consumer sentiment 71.2%. If we see the trend, we are going higher and higher and higher, and consumer sentiment it's quite high, but the 5-year inflation expectations 2.9%, the lowest in I think almost 1 year, despite energy and food prices jumping. And this is a sign that the consumers are aware that inflation is ticking lower, but they expect inflation to go lower. The sentiment is still high, demand is still there, but analysts and economists and all of us traders are a little bit worried about the outlook on the inflation, the ticking higher in the summer, the sticky core inflation on shelter, services, and transportation, and also the recession fears that China and overall worldwide economy are putting more pressure on. Internationally, China's July trade data showed a double-digit drop in imports and exports because the second largest economy growth is not as expected. It's not increasing, and that's putting a lot of pressure regarding economy growth worldwide. Let's jump straight into the charts. And this is the Nasdaq, the weekly chart. And we can see that after the first week of August that we got 3.11% in the red, we are continuing lower. If we check the details regarding levels from last week, the blue dot lines, we see that we are continuing moving lower through last week low and are putting a nice, basically a double bottom from the first week of July weekly. But I think this pivot is the one that everyone is watching. This push on the candle, this bounce, everyone's watching 14,800 for the Nasdaq. We tapped January 2022, we put a bottoming tail and everything's starting to fall. At least it's not a huge pullback, but 2 weeks straight in the red for the Nasdaq. If we go to the daily, we can see more clearly where things started to go south. This was Monday's green candle. Buyers appeared here at last week low, the blue dot line. Look at this bottoming tail. But then on Wednesday and Thursday was the day in which CPI came out, and look at this candle. This is huge. This is huge. Because we tapped, the high was 15,400 and we closed 200 points lower. So I think a lot of buyers got trapped here. And on Friday with PPI came in the way it showed. I mean, we are certainly trying to find this kind of lows, but this trend line is now broken. We are starting to drifting lower and lower and lower. And basically on the 30-minute chart, we are seeing rejection after rejection after rejection. This was Friday, big push, rejection into the close. Mondays, the one and only green candle of the week, choppy price action. We dipped on Tuesday, we dipped on Wednesday. We tried to move higher with, I think, a lot of bulls got hyped here, but look at this pre-market pivot. We just went straight down. This was the day that I think a lot of bulls, let me go to the 5-minute, a lot of bulls who got trapped here. We went straight up into the open, nice breakout of the blue dot line last week low, trying to push higher on expectations, but then I think CPI, for the ones that are not seeing the details on energy and shelter prices and services, I think more people were trying to push higher. But look at this. This was clearly weakness. And on Friday with PPI, that was the nail on the coffin. Choppy, really choppy day, finishing basically, I think it was just from pre-market 0.69 in the red, but finishing at point of control with a little bit of volume down here. But overall, the week is red. And we analyzed why. The sentiment, the consumer sentiment is there, demand is there, but the outlook is the most important thing that we have to pay attention to. The economic optimism is not as expected. The inflation data on the consumer and the producer side is not as expected. And more people are starting to realize that worldwide, China is not putting that demand, and overall growth might be lower than expected. So everything is tuning in that direction. And if we check dollar is bouncing strongly after, look at this fall down, but the bounce of the 100 is still there. We have to still see if we are right below the ascending support that we broke. We are right below. That's the weekly, strong weekly though. But I see buyers on the dollar, and the dollar might give us a lot of opportunities to the downside. Remember that strong dollar, it's bad for the stock market. In terms of the 2-year, look at this. We went down on Friday, but we recouped this week due to inflation being higher than expected. The 10-year, it's also pushing higher, and it's already at 4.16, and the 2-year it's pushing towards 5%. So yields are still pushing. The outlook, the expectations on higher inflation for longer are still there. And that's not good for the stock markets. Let's do a quick review of the big tech stocks. Apple really drifting lower, finding some kind of buyers on Friday at this gap around 177. But overall, the weekly, it's continuation lower. Last week was 7%. This one is 2%. We need to see this gap, how it reacts to it. Microsoft, well, it's slowly trying to find some levels. I think for sure at this gap, there will be buyers willing to commit. 320, it's the level. And it's not super, it's not super bullish, it's just drifting lower slowly. We need to find buyers to find this structure, maybe try to reclaim the 20 on the daily. That would be quite good, but this purple line is the 20 daily moving average. We are mostly above that, but then we are now below that. And that's something you have to pay attention to, because Apple was almost all year above that 20, but then once it went lower, the 20 moving average on the daily, we just got crashed on earnings, and we are right below, almost 25 points lower. Tesla, it's trying to find buyers also on the gaps. Remember, all these stocks have a lot of gaps below due to the huge boost that was in 2023, leaving a lot of gaps below. And most of them are going to be filled. We just have to find a good spot if you want to invest in some of these stocks. But Tesla is just drifting lower. I think this is mostly due to, in all these stocks, the reason is lack of buyers, because everyone is trying to wait for good deals instead of buying for all-time highs. Apple, it broke all-time highs. Microsoft, it broke all-time highs. Tesla, it's trying to find some of those. It's not at all-time highs, but Tesla has its own catalyst. Amazon, It tried to push for August 2022 level at 145, but look at this huge gap that got on earnings. We push and slowly we are trying to find buyers. This pivot is going to be quite interesting to see if we drift lower and start doing things like this, start continuing rejecting these levels, and trying to fill the gap, or we just find buyers and we push for a retest of this week. That's for Amazon, Google, and Nvidia, the AI names. I think they are just hovering. For example, Google is just above this level that we bounce off and just provided this gap on earnings. A lot of these names, apart from the push on AI hype, has a lot of push on earnings, a lot of gaps. So this one is going to be quite interesting. Also, the 20 moving averages putting some support also here around 128. That's for Google. Nvidia coming from the 480 all-time highs. This was basically a double top. We went lower, we rejected the 20, and this pivot provided the opportunity for sellers to push the stock down, and now we are in this range. We basically were all the summer. This is a small gap, and then we have the gap on earnings. And I think Nvidia is in a nice spot in between these two ranges. This range is quite interesting to see if we bounce and we find some structure here for a push higher. If we reject that, I think a lot of people is going to watch for this gap. Finally, Meta, it filled the gap, the earnings gap. It's already filled. I think we need to see this close. This open is trying to hold, and then we have this consolidation in which we push, we rejected, and on earnings we crashed. We push a lot, but these kind of moves, I mean, Meta is not bullish in my eyes. These two big candles before earnings, then the gap on earnings that is now filled with a lot of red. I don't see buyers up here. And remember that Meta is up like an insane percentage, like 200 and something, 250. So think about all the people that are willing to invest in Meta. Do you think that they are going to invest up here? And the same applies for all these stocks. Amazon, Tesla, I think we have to be patient. If you are really going to invest in these names, you have to really be patient. And I think overall, that's all. I wanted to recap this week after my holidays. I follow the market, I follow the economic data, and I have all prepared for you to provide a summary on the week, to share my thoughts on the inflation side. I think inflation numbers are not good, are below expectations, and the outlook is even worse. I think we might see a soft landing. It's still there, the possibility, but recession is not my fear. My fear is inflation not going down as expected, and we are at super high levels of interest rates. So if Federal Reserve see this and thinks about going even higher, remember that markets were not pricing in. Let's go into review that. Markets were not pricing in another rate hike. They were only pricing in, and they are still pricing in, one hike, even at November, with 63% of probabilities of no hike, and start cutting rates around March. This is expectations, but inflation just came out, and if we continue seeing signs of inflation not going down as quickly as the Federal Reserve wants, we might see another hike, and that hike is going to destroy the market. One last thing, QT, quantitative tightening, the Federal Reserve is still selling a lot of assets, minus 33 trillion, minus 22 trillion, minus 20 trillion. So pay attention to this, because I think in this regard, this week it basically bought a lot of stuff, as you can see, but this is due to the debt ceiling raise. But take a look at this QT and all the assets that the Federal Reserve basically were selling throughout all this time, because there's a huge discrepancy between the assets that the Federal Reserve are selling and the levels at which the indices, the tech stocks, and Nasdaq, the S&Ps are trading with. So be really careful with those expectations, because I think outlook, sentiment, and expectations are all together, and those provide the overall price action on the weeks. And this summer, energy is going up, shelter, services, and prices are ticking higher, and it's quite logical for Nasdaq and tech stocks and some stocks to really push and move lower. We have to see where we start seeing buyers. I'm thinking 14,900 would be the best spot after this break and double top basically, and then the break of the ascending support. I think this spot is going to be quite interesting, at least for me, to start seeing and changing the sentiment. This week I've been quite bearish. The data is still bearish. It's not good for the market to have this CPI and PPI. Consumer sentiment still strong, but don't get fooled. Be smart and look at those details below the headlines on the media, on the news. Do your own analysis and see the price action. You will certainly improve your trading for the better. And that's all from my side. As always, thank you for your time. If you liked this video, this weekly recap, and you want me to continue doing those, give it a like, subscribe to the channel, and I will be uploading these kind of videos every week, apart from the videos that I upload every day for market forecast, market updates, and market recap. I appreciate your time as always. I'm coming from holidays. I hope you are having some rest and some time with your friends and family on holidays too. The market is not the only thing that we need in our lives. We also need friends, time for ourselves, family. Just enjoy your time, and at the same time, be in the market. Just see the price action, follow the data, follow your analysis, and it's not a matter of being 100% on the market. You don't need to do that. Just enjoy the summer, and I hope you had a good trading week. Have a nice weekend, and see you on Monday for a new week. Expectations are still a little bit lower. We need more data, but the data that is coming in is quite bearish. Let's see if we find some buyers around this level at 14,900 on the Nasdaq, and if the rest of the tech stocks start to see some consolidation after all these weeks, 2 weeks in a row in the red. And as always, discipline and risk management are key for your success. Stay safe, everyone. Have a nice weekend, and see you on Monday.